welcome to the Insurtech Story podcast. And you're listening to a very important episode which talks about how technology is reshaping customer trust and experience in insurance. And to discuss that, we are having a special guest, Vikas Chaudhary, who is the Chief Executive Officer of FatakSecure, which is a subsidiary of FatakPay. Before we begin, we are one of the leading insurance technology podcasts of Asia and the one only from India. You can find us on Spotify, Apple, Amazon Music, Audible, YouTube, and insurtechstory.com. With that, let us begin with today's discussion. Vikas, a warm welcome to the show.
Thank you. It's a pleasure and honor to be discussing with you.
Vikas, could you just help our listeners understand a bit about your background? What made you start the journey in insurance? What are you, what's your mandate at FatakSecure, and how you see the Indian insurance market shaping up?
Sure. Thanks again. So from a quick background, I'm an insurance professional. I have been throughout an insurance person, all of them through life insurance. By my profession, I'm an actuary by profession. I have been into various positions as chief actuary, chief risk officer, product development, and so on and so forth, as well as a consultant for UK firms. And then typically what led me on this, Surya, was I do believe there, as rightly mentioned, there is a wide gap in terms of understanding, awareness, need, and complexity around insurance, unlike some developed countries. And I do believe, given the way it is needed, the whole inclusion, when you talk about BFSI, the I part, which is the insurance part, as far as inclusion is concerned, to some extent, does require warrants attention, which led me to open this distribution company under the group company and trying to touch upon what the government is looking as an insurance for all vision by 2047. I want to be a part to it and contribute to the same mission.
Great, thank you, because I think that's of course, it's a very noble cause that we all are looking at, and of course, with that vision in place, every founders and every leaders in the insurance space in India are looking forward to, put in their bit of contributions wherever it's possible, and of course, technology is going to play a very important part in that. With that, Vikas, my first question to you, from a CEO's perspective, what are the biggest gaps in today's insurance value chain that technology, can realistically fix without overpromising transformation? What's your take?
I think the gaps in insurance, while I'll put it, there are many gaps has been fixed thanks to the digital world, thanks to COVID as well. At least the insurance company started understanding that things can be done online as well. A significant part has been done majorly towards the sales point of view, which is making sales accessible, sometimes easier, or maybe even affordable. And I'll come to those parts later. But at the same time, it is a promise which is being sold, and the moment of truth comes during claims. I think, by the sheer nature that the event of insurance claim, the probability has to be low for a premium to be affordable, and they should cover events like that. Not much has been moved in terms of claim servicing. There continue to be challenges in terms of, when you talk about technology, has enough technology being adopted across claim servicing, or even for that matter, significant across policy servicing as well? Are there standardization of documents, especially for health insurance, say? Are they automated? Are we even thinking about parametric claims? Why do I even need to file a claim? Are there enough data and information available on ecosystem for me to get a claim directly into my account without even raising a claim? Say, for example, a travel insurance. My baggage gets lost, its information is available. My flight is delayed, the information is available. A crop rain does not happen, information is available. I need not, as an insured, I need not do. While those are more about event triggered or parametric insurance, even when you look into those documentation which people ask for example, on hospitals, so you need to provide your discharge summary, your vouchers, KYC documents, and so on and so forth. Are there enough surrogates available and information available for the insurer to actually collate those information across various ecosystem, right? And are they efficiently using them? For example, hospital bills, if you have a tie-up with those hospitals, why do I need to share my discharge voucher summary? You should jolly well take it from them. If it is cashless, similar. Even if it is reimbursement based, you could have taken those documents. Or similarly, if you require an FIR, can those government organization, can you effectively take those FIRs directly from those government organizations? If you require a KYC details, while DigiLocker is there, similarly for bank, you want to check for account aggregators and take more information. So from a gap standpoint of view, I do believe a lot has been done. Great as far as the sales process is concerned. But by the sheer nature, I think the post-sale services majorly around claims, I do believe there are gaps. And of course, they will still get fixed. But that's one point I'll try to put it over here.
Right. No, I mean, that's a very valid, aspect there, because so just one thing to add there, where you see technology playing an important role in closing these gaps.
So what happens across this, Surya, is that there are information available across various ecosystems. They are in silos. So for example, as I said, you look at that there was something called insurance repository. Now it is working on silos. When you look into dematerialization of accounts, right? You have an NSDL and CSDL, and they have actually integrated, and you get one statement, anything across all investments in one place, right? Do we have the same for insurance? Do I have a repository that is also not mandated EIA account, as you know, insurance aggregator? It doesn't. If you require one Aadhaar or one PAN, whatever is mandated, well, there are confusions around that as well. But if there is one particular iCard which you require as an identity for a insured, why can't I fetch all information in one place? Right? And technology and these information are available; they're just scattered, right? So there is IIB which has started doing some around it, but that's again if you come into the insurance ambit, and one of the biggest insurer, which is LIC, is not part of it. So,
sure.
Right. So Surya, what I'm trying to say is information is available across. So when I told you about e-insurance account, why do I need to have a separate e-insurance account? Are we again creating so many silos together? Why can't it be linked with DigiLocker? Similarly, when you talk about technology, I give you an example about, say, an FIR. All FIRs these days, every police station have to upload them online, right? They need to keep a track of them. So why do the insured need to run pillar to post about putting those FIRs, giving it back to insured? They can jolly well take it from there. And so are the hospital bills, say. So this is how technology, I think there is information available. They are working in silos. That's one. They need to have a together ecosystem around this, would be my thought.
You mentioned, even when resources are in place, but the systems are working in silos. So that kind of, has a direct impact to the end users' expectations and experiences, right? So drawing from that aspect, how are customer expectations in insurance, changing with the rise of digital platforms? And what does this mean for insurance companies trying to balance speed, personalization, and reliability? And you yourself, you're running a digital platform, right, on the distribution side of it. And you very briefly touched upon the few gaps where system is one of the main areas. So how do you want to answer this?
So let's put it from an expectation standpoint of view. Still, when you talk about digital, buying insurance digitally, I think people compare digitally, buy end of the day physically, except there are definitely, for example, when except mandatory insurance products, which is, I will say, motor,
Yeah.
travel insurance, because you won't get a visa. So you typically end up having insurance online quickly. You do end up buying a lot of OTC products. You can call them as embedded as well, or sometimes it is just part of the journey, or standing standalone as a cross-sell, right? People have moved to some extent of standardization across health insurance and term insurance. But when it comes to larger ticket size, people look into either an advisory or a Me Too way. आपने क्या खरीदा है? कौन सा वाला खरीदा है? So it's a very Me Too kind of a concept. People talk to each other, friends and families, and thereafter buy. It is a typical norm, right? So the expectation, if you ask me these days, is that the problem is that the products are not standardized, unlike a typical FMCG kind of a product. While they aren't also, the difference between typically a consumable product is that you consume immediately. Whereas a difference between an insurance product is you buy a promise, right? And that promise is that something will happen to you, which it is your interest that that event should not happen. But God forbid that event happens to you, that promise will be fulfilled sometime in the future. That means you are not you're not able to avail those services right now. Right? Insurance is very less touch points, right, Shurya? So it's a promise you buy, you pay a premium or a price to that promise, a promise which sometimes the event should not happen as well. Now, what do they after they expect? Because it is not standardized, because you are not able to compare the services, people typically look for, most of them typically look for what is covered. But I do believe the newer age customers, they do understand and try to look for what exactly is not covered. Right, and I'll try to put, as I speak along, there's some thoughts around it. So, for example, motor insurance, right? So, while people, 90% of them don't even know that actually it is third party which is mandatory, right? And of course, while people will push for comprehensive, and people love, as I said, we love materialistic things, and we believe we are immortal. So, people may not cover life, but they definitely would cover motor for sure. But do they even understand the value of ODV? IDV, they won't, right? For them, the price point sometimes is determined by how low can you take the value of the vehicle. Now, it is unfortunate that insurers also provide a lot of flexibility on the value. And people actually end up taking a lower declared value of the vehicle without understanding its repercussions. That a lot is linked over there, specifically if it happens on theft, or if there is a flood happening, or you're actually having a CTL or a compensatory total loss, then whatever it is, you will end up getting the value what you have declared. Even your car would have been, say, 60%, 70% more than that. In health, say, for example, people, are they even aware that your consumables may or may not get covered, right? Similarly, in a life savings plan, typically, are people even aware that if you stop paying premiums, the repercussions can be catastrophic? Like the lapse value or the cash value is very, very low, right? So that's the expectation. My belief, I think, is very important that customers should be made aware, and they expect also to be very, very clear and candid about what should be covered and what exactly is not covered. Because there is a moment of truth, they look for bigger picture as only one thing. कि भाई मुझे क्लेम मिलेगा क्या? ये 20 साल बाद ये कंपनी रहेगी क्या? 10 साल बाद ये क्लेम रहेगा क्या? मैं हेल्थ इंश्योरेंस खरीद रहा हूं, अभी बीमार नहीं होऊंगा, 10 साल बाद बीमार होऊंगा तो क्या मुझे पैसे मिलेंगे? And I'm sorry, I'm just moving into linguistics here, just to understand what exactly. So people look for that trust in that company. A lot has to do with the brand. People also look for now these days like claim settlement ratios. It is an important point, I do believe. Sometimes people talk about solvency ratio, which I believe it's of no use, nothing to do with solvency ratio. But people end up looking at solvency ratio, which has nothing to do with whether a company is good or bad. But claim settlement is, a brand is. And I think from a technology standpoint of view, while there are digital platforms and marketplaces who provide a lot of products, they do also provide comparisons. I'm just trying to compare between Amazon, Surya. So what exactly happened in a Amazon space is that you would look for 2-3 things, right? You would look for a price, you would look for a review, and you would look for a brand. The same applies for typically if you're buying in a marketplace for insurance as well. A price is important, but the same thing is like you don't only go for price in Amazon. You look for trust and review. So brand again becomes important. The only difference is, as I said, because it is not standardization, technology has to differentiate between when it is health insurance product, while 80% is common, that 20% has to be spelled out very clearly of what this product additionally covers or does not cover versus somebody else covering. Like some covers consumables, right, Surya? Some covers OPD also. Some of them cover pre and post hospitalization much more than what is mandated. Some cover very low waiting period. Some provides life insurance term cover a higher recurring value, like you will continue to get increasing value every year to combat inflation, right? Some of them provide claims-free benefit which does not go away. Similarly, in a motor insurance, there are add-on benefits which sometimes, because for example, no depreciation kind of a cover or key replacement. So are people categorically even aware of that? It is not the price point. Actually, the product features are different. And are they spelled out enough? And I do believe technology is working on that, but I do believe there is a long way to go around this. There are push and pulls, whether it is due to remuneration, people or the distributors tend to move in a way they intend to have accordingly. But I do believe if a basic comparison which is across all and a very clear comparison, both digitally backed up with either telecalling or backed up with a proper advisory or an AI tool to actually explain them what is your product, and most important in a very simplest term, what is not covered.
Right.
From an expectation standpoint of view, you mentioned about speed. On the sales standpoint of view, speed definitely comes across sachet products. Embedded insurance. Embedded is a very, very simple. It's just embedded. So speed is over there. From a personalization standpoint of view, by the sheer nature of personalization, a complete end-to-end digital journey will be a little bit difficult, it would be my views. It does require some amount of human intervention, which is advisory. Because personalization means it has to be explained. We could create products basis certain segments, basis certain profiles, but the fact that you are actually personalizing means some amount of advisory needed. Reliability is always with respect to brand for insurers.
Yeah, absolutely. I think, as you mentioned, the more technology grows and the awareness for insurance also increases, I think, trust, which comes from more clarity and transparency, is something that, at least the new generation of the insurance customers, the prospective consumers, is something that they look for. Because earlier, insurance was treated more of a push product, right? And now, as we really tend to understand why we need an insurance, you mentioned about sachet products, right? So the more we realize, more we understand the criticality about it, that's when I think, the penetration really helps move the graph, right? And also, we were talking about claims some time back. So insurers certainly, as we discussed, no longer just insurance, I mean to say, is no longer just about policies or claims. So how a platform like, yours and many others that, in the market, I think is necessarily how they create that experience and trust at scale. So it's a fantastic point that you have brought out there. So because my last question to you is, looking ahead, how do you see insurance platforms evolving in the next 3 to 5 years? Will they become ecosystems, marketplaces, or embedded insurance enablers?
Sure. So, Surya, even on claims, I'll just point to probably touch upon the previous point.
Yes.
So one is the claim cumbersomeness, or whichever way, which has to do more with the insurance companies. And my view is, if the insurance company do not do the job well, the Insurtech will do. That's where the gap comes, right? Because and that's where the startups and the various tech companies work, because the mammoth is believing that there is time. The biggest challenge, I continue to believe, is also about awareness. So and I'm not talking awareness about sale. It is also about awareness about post-sales. A significant number of claims doesn't even get reported. So Well, the pricing actually works. The pricing doesn't work basis the risk pricing. They actually works basis that there are significant number of claims which won't even get reported to the insurance company, right? And I think that's another gap we need to understand in this, that after sales, is there enough awareness, right? So I wanted to touch upon that point as well. Yeah. When you talk about,
Absolutely.
yeah.
Yeah,
So
please go
going
ahead. Yeah.
forward, how does the future looks like? I think there has been a fabulous job done 3 to 5 years. It has to do a lot. It is actually a total ecosystem. I am quite favorable of the government. There has been a lot of push done with the regulator, especially IDI. The government is also pushing certain things to understand. As you know, and I have told about it, some of them are mandatory schemes, while they still require an overall, such as PMJJBY, PMSBY, or Ayushman Bharat, and so on and so forth. When you talk about going forward, I think what has happened, what will exactly happen in terms of these digital platform is that currently digital platform is working more towards one size fits all. Also, it is having same product for all segments. I think this won't work. We are talking about a 1400 million population. We're talking about 5 years, we will say 1600 million population, 160 crore and so. It is vast. It is vast. While the patriotism is common across the country, the language, culture, skills is very, very, very different, right? And I do believe there has to be customization around this. So digital platforms, and rightly so, right now, because the penetration is pretty low, there will be one platform which is offering everything and offering for all. And I try to put example, right? There are segments who would only require a 1 lakh insurance, say. And there are segments who would require a 50 crore term insurance as well. Now, I'm just going to an extreme, and don't take it that way. I'm just trying to tell you that this is a whole segment which we try to put. There has to be customization. But there will be customer segmentation. I do believe in digital platform. There will be segmentation even from a product standpoint of view. One size fits all won't work. So you need to segment customers. You need to segment products, and it will come over time. And one product fitting everybody needs, both from an insurance company and an insurance distributor standpoint, won't work. Like we need to co-create products which actually meet the needs of the. So one is across the various events across the human being, which probably is similar across all human beings, but it is also a function of occupation and income. And can we customize products or customize segments and take it? One of the ways I believe is that is where one will move. The second, I do believe that there is clear opportunity, and digital platform will work towards claim automation. Can it be parametric claims? Can it be event triggered claims? There are some examples. I don't want to put it because I'll have to use some names, but there are in reality examples which are event triggered. So one of them being, if you cancel your flight, you get the money immediately, right? And actually that's backed by insurance in behind, but the insurance doesn't get involved at all in that. And it's the tech platform which is canceling. The other is, I know one of the companies where your wearable glasses, which is if it gets stoned out, you just go to the shop, they take the video of the glass, and you can immediately take another glass for free. The back is backing by insurance, but the tech platform is taking care of those. So that is where it will happen. The claim has to be instant gratification. That would be my 2 points around forward looking for digital platforms.
No, absolutely. I think, as you correctly mentioned, and also to add to that point, next 3 to 5 years, even insurance platforms, how they're really moving up will converge into kind of what we see in a hybrid kind of a model, where they would be operating as ecosystems for ongoing engagements, see as marketplaces for choices and transparencies, and kind of embedded insurance, as we say, the enablers that would seamlessly deliver protection within everyday digital journey. So it's kind of bringing all the three and joining the dots there, and of course covering of the points which you rightly mentioned throughout the discussion on trust, then how the end user should make their choices, and of course how we make the journey more fruitful for the end users as well as the insurance provider. So with that, because that was a great discussion on putting customers back at the center through technology, and thanks for sharing how trust is built not through promises but through everyday experiences. To our viewers, we hope this sparked new thinking, and thank you very much for your time, and see you in our next episode. Till then, take care and stay safe. Goodbye for now.